Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 11th of the 11th, 2019. So, welcome everyone. Welcome to this Monday's morning session where we're gonna have a quick look at the markets, a few of the charts, usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so also just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD bank website, and specifically our JFD research page, which you can come in and visit us here and check us out on jfdbank.com. And yep, as I said, click on the research tab right here. And I'll take you to the page which we update on a daily basis, and I believe you can find a lot of useful stuff here for yourselves. So feel free to check us out. But right now, let's jump into the charts. Now, the first one I want to touch on here is the Nikkei225. So haven't looked at Nikkei for quite a long time now, but overall, of course, we can see that the index is trading above its, I would say, still a short-term upside support line taken from the low, the 26th of August, and it's a bit of a tentative one. We only have two touches here, but we'll keep an eye on it. And as we can see, the index has kind of distanced itself quite a lot from this line. But from a even more shorter term perspective, we do have another upside line here, and this one right here, taken from the low of the 10th of October. So in a way, how you could play this one out. You can see that today the Japanese index kind of retraced to the downside after hitting its high here. Let's say the new high for 2019 at near the 23,591 zone. And it then sold off on Friday, and today we saw a continuation move to the downside. And we can see that the cash index is moving also lower still. In a way, we're going to keep an eye on this upside line, and we'll see how it performs around here, because if it rebounds, this is good news for the buyers. The index could continue moving higher, but in a way, taking this situation into consideration right now and this formation right now, we'll probably wait for a push above the recent high here, or should I say last week's high, at 23,591 before examining higher levels, because this whole area here could be a bit of a tricky one. So it's better to be probably, well, not probably, but it's better to be safe than sorry, guys. So that's why we'll wait for a push above this 23,591 level first, because this way the index would confirm a forthcoming higher high, and we could target higher levels. If this upside line starts failing to hold the price, then a break of it could lead towards further declines. But the only thing is that here in this situation, what we're going to do here is we're going to monitor this little area of support right here, near the, let me just double check that, roughly near the 23,260 zone. So if we get a drop below this in a way increases the chances of a further slide lower. So that's why, guys, keep your eyes on this one. It will be quite interesting to see if it can drop below this. If it drops below it, then yep, further declines are possible. Then we will aim for this little target right here, and this little high here of the 29th of October near the 23,000 mark, not far from there, so 23,008. But in a way, you could kind of round it up towards the psychological 23,000 and keep your eyes on that one. Jumping into FTSE 100. Now, last week I talked about this one, and basically, I was talking about this potential idea here. If this barrier, the 7,351 area holds, then we could see a nice rebound. So you can see that on Friday we had a nice rebound exactly from that area. It pushed kind of back above it and closed the week above the 7,351 zone. So, but looking at the cash index right now, we're seeing that there's a bit of a move here below this level right here. So in a way, the bulls still have a chance here to come in if we see the index rebounding from this upside support line taken from the low of the 3rd of October. And if it does that, then yes, we could see some more buying activity here going maybe back towards these one of our targets here that wasn't actually reached, was not reached last week here. The 7,440 zone. I talked about this one a lot. It came close very much, but to be honest, it kind of reversed straight away after that. So it just fell shy of a few points of reaching it, probably about 9 points or something like that, and then started drifting back to the downside. So in a way, like I said, we'll keep an eye on this upside line, but if this upside line starts failing, then, well, this is where the bull should remain very cautious, because if the price starts falling below the 200 EMA here on the 4-hour chart, then in a way, yes, it increases the chances of a further drift lower. We will target the 7,250 zone here, which previously acted as a fantastic area of resistance and also as support. But if that fails to withhold, now this is where it could turn out to be ugly for the buyers. So we could then see a bit of a bit more movement to the downside. So that's why, guys, keep your eyes on this one. Be very careful, and for now, probably, like I said, keep an eye on this upside line. Gold. Gold, I talked about gold last week, and basically I was saying that if this level here does not hold, if it struggles to hold, then we could see a bit of a move lower here, maybe a test of this 1453 zone, and then a rebound and a push back higher. So, but as you can see, this level here, the 1459 area, hold perfectly. Maybe just slightly below that, but you can see that it held the price from moving lower here. So now we are seeing a bit of a correction here, and in a way, all this is coming in line with the equity markets kind of sliding right now. So in a way, if the equities can, let's say, continue to slide a little bit, then we could see gold now traveling a little bit higher here. But the only thing is that we'll keep an eye on this little obstacle here, which is the downside resistance line taken from the high of the 4th of November, and we'll keep an eye on this one, because if it holds, we could see another round of selling. So we could see basically something like this happening here. But if this downside line fails to hold it, fails to keep the price down, then a break above it could in a way increase the chances of a further move higher. The only thing is that for us, let's say, to get a little bit more excited about the or should I say a little bit more comfortable with the upside, well, we will wait for a push above the 1475, and then we'll aim for higher levels. The only thing is that all this territory here could still be a bit of a tricky one because of all of these EMAs here. One of these EMAs could in a way provide maybe some resistance here for the price, and then the price could reverse back to the downside. So that's why, yes, we will aim for higher levels if we see a push above the 1475, but we'll have a very tight stop loss here, and we'll wait for probably this one to climb all the way here towards the 1495, because this is the area where we could get a little bit more excited about higher levels, because this would also place the commodity above all of its EMAs, and then more probably buyers could be joining in here. So that's why, yes, we will start considering the upside above the 1475, but to get a little bit more comfortable, we need to see a push above the 1495. So let's keep an eye on this one. CAD yen. So CAD yen, I talked about this one on Friday, if I'm not mistaken. Let me just quickly double check that. Yes, I talked about this one on Friday, and basically what I was saying here, guys, now with CAD yen, basically it was still trading above this little kind of short-term tentative upside support line taken from the low of the 9th of October. But what I was saying, that if this upside line starts failing to hold the rate from moving lower, kind of, then yep, we will consider some lower areas on the break. But for us to get comfortable with the downside, we need to see a drop below this 82.31 zone. So as you can see, the pair did drift lower. It tested this area, but it kind of rebounded from it, and you can see that this area here is acting as a very strong area of support. So that's why, guys, we'll keep an eye and wait for a clear push above the 82.31 zone before kind of targeting slightly lower areas. Now, we will then target the 81.85, 85 zone, which is the low of the 1st of November, or slightly below that, we do have the 81.74 zone, which is marked by the low of the 15th of October. So that's why, guys, for now, yes, it could be quite interesting, but we need that confirmation break. With the upside, we'll take a very conservative approach and wait until we get a move back above the 83.11 zone, and only then we will target higher levels. So let's keep an eye on this one. USDCHF. So with the USDCHF here, again, I talked about this one last week as well, and basically what I was saying, that yes, even though if we get a push back above, push back to the upside here, and this is what we were targeting because we had a nice rebound from this downside resistance line. In order for us to get a little bit more excited about higher levels, well, we needed to see a nice, good, clear push, and ideally maybe a close of at least a 4-hour candle above the 0.9975 zone before we could kind of target higher areas. And you can see that the pair did travel higher, but failed to kind of stay above the 0.9975, and now it kind of corrected a little bit lower. Still, we remain somewhat more positive than negative on this one, especially if it now reverses back to the upside and starts flirting with the 0.9975 level. So let's keep an eye on this one. Again, this a nice good pop above this could open the path towards higher levels, because this would confirm a forthcoming higher high, and we could then aim for the 0.9996, of course the psychological 1 zone, which today coincides with the R2, so basically a very good target here. And of course, slightly above that, we do have the high of the 3rd of October, or in other words, the highest point of October at 1.0028 zone, roughly around there. So keep your eyes on this one. With the downside, again, as you can see by the chart here, by the arrows, we need to see a drop below the downside line and a drop below the 0.9909 zone before kind of examining lower areas. I do understand that we're missing quite a bit of a move here, but to be honest, all this area could provide some sort of a area of support for this pair, so from which it could rebound and push back to the upside. So we've seen that happening many times, so that's why we're gonna be very careful and cautious here with the downside and wait for a drop below this level here. GBPUSD. Now then, keeps on flirting with that 1.28 zone. So we did have a break last week to the downside. We had a nice close. The weekly candle closed in below the 1.28 zone, but as you can see this morning, we are having a bit of a correction here to the upside. So, but this area right here now, the 1.28 zone, is acting as a fantastic area of resistance so far, of course, unless something changes. Now, don't get me wrong, we do have some data coming out today from UK, so you should keep an eye on that one. So we do have the preliminary GDP figures here for UK, so that's why keep your eyes on this one, guys. We could see a bit of movement here, so let's see how this is going to play out. But for now, it's a very tricky one. I mean, this was our idea that we've posted here on TradingView last week, and of course, for now it is working out nicely. The only thing is that that's why we have a very tight stop loss here, because in a way this could become a little volatile, and if we could see a push higher, maybe it'll stop us out here and then reverse back to the downside. So in a way, continue monitoring this 1.28 zone. If it continues to hold, then yep, we will target the 1.2707 zone. That's what we're aiming for right now, because that's also not far from the 200 EMA here on the 4-hour chart, and could be a nice area of support here, where the rate could stall for a bit until kind of it decides where it wants to go further. So we're gonna keep it short and simple here, and yep, like I said, we're gonna keep an eye on this area right here, the 1.2707. In terms of the upside, for us to get a little bit more excited with higher levels, well, we'll start considering higher levels if we get a push above the 1.2880 zone, roughly around here. But if it starts pushing above this downside resistance line, tentative of course, but still a downside line, if we get a push above this, then yep, this is where it could become a little bit more exciting for the buyers. And the last pair for this session I'm going to talk about here is going to be euro dollar. Now the euro dollar, last week I was saying to you guys, if we get a drop below the 1.1063, the area that we're going to be targeting is going to be around the 1.1021 zone. So we did get our hit, fantastic. And this is what I was talking on Friday, because on Friday we were still hanging around just slightly above this 1.1021. So I was saying that we're still targeting that level, and we did get our test. We did get a fantastic test. We did get an overshoot a little bit here as well, and now we can slightly adjust this chart a little bit and some of the levels. So in a way, this is the low that was tested, the 1.1016. In a way, you can see that the pair is correcting a little bit higher here. And what we could do now is redraw some of these lines. So this basically now is kind of forming a nice little downside resistance line, a steep one, a very short-term one, but a steep one, and a steep one, I would say. So in a way, as long as it remains trading, continues to trade below this, then we could see another round of selling, potentially dropping below the 1.1016 and targeting our other important level here near the 1.0989 zone, which is marked by the low of the 15th of October. So in a way, for now, guys, let's keep an eye on this one. Let's keep an eye on this downside resistance line. Probably something for today. If we get a push above this, if we get a break of this downside line, then for us to start considering higher levels. Now, this is where a little bit I'm going to change the game plan from last week. So basically, we'll start considering higher levels if we get a push back above the 1.1063. Now, this level here no longer valid because that was violated, and probably something to redraw here a little bit as well. And basically this one right here, the 1.1093 zone, which is marked by the high of the 6th of November. So if we get a push above that, then in a way this places the rate back above all of its EMAs, and there could be more chances for this one to drift back north. So but again, this is the level that we're going to start looking at higher levels again, the area around the 1.1063. But to get a little bit more excited about higher levels, a push above the 1.1093 zone, it would be needed. I do understand we're missing out on a territory right here, but again, it's a very this area here could provide some decent resistance, and we could see maybe then another round of selling. So we've seen that happening many times. So let's be careful on this one. But in a way, how you could play this one out, if for example you see the rate stalling around here near this downside line, if you're still not comfortable, let's say, with the potential downside idea, then in a way wait for a drop below the 1.1016 zone, below the low of last week, and then this would confirm a forthcoming lower low, and we could target this lower area that I was talking about, so around the 1.0989 zone. So and as I said, with the upside, these two levels that we need to keep an eye on. So let's keep an eye on them. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching until the end. Don't forget that we do have some data coming out this week. Some important data. It's an inflation week this week, so check out the economic calendar. Like I said, the first data to keep an eye on will be the today the GDP figures here from UK. So yep, keep your eyes on those. Let's see how that's going to play out, how the pound's going to react to this. We may see some temporary reactions on the pound, yes. And the reason why I'm saying temporary, because still the whole kind of Brexit issue remains, and that's what seems to be driving the market so far. So let's keep an eye on that one. Okay, guys, if you want to join me later on at my Traders Tea Time, as always, that's 14:15 GMT. Thank you very much, and stay safe. Bye-bye.